Assalamu alaikum. Dear audience, today is the last day of our P2P sessions F6 TX. And yesterday, if you remember, we did corporation tax, and then we did one question soft app. There is one more question, last orders limited, which we have to do today, and then we'll shift to the planning part, the 10-mark question, which normally comes in last 40 marks. Okay, we'll be discussing that also. Okay, so now be attentive, and the question right now is in front of you, and I think I've also sent you this question. And if you have your exam kit, Kaplan exam kit, you can open your exam kit as well so that you can easily see it. Okay, let's start now. Last orders limited ceased trading on 31st of January 2020. Now, very important message: cease trading. That means last accounting period. And if see, I can see loss in it. Came in my mind, terminal loss came in my mind, and obviously terminal loss with the range of 36 months back, maybe we have to discuss that also. Okay, right? So be active. Having traded profitably for the previous 10 years, the ordinary share capital of Last Orders Limited is owned by 80% by Gastro and 20% by Government Limited. Now, two messages. This company is 80% owned by Gastro, directly owned 80% by Gastro. That means more than 75. So this company is part of 75% group. This company is part of 75% group. So yes, this company may transfer his losses to Gastro Limited, and Gastro Limited losses may come here. Exchange of losses possible here, right? Plus one more thing. If examiner asks you about the limit proration, if you remember, so yes, the limits will also be prorated. Because this 80% is greater than 50%. This 80% is greater than 50%. Okay, come on. Now, last order limited summarize statement of profit and loss for the 10-month period. 10 months, don't forget, very important. This last accounting period is of 10 months. Okay, so maybe you have to apportion certain things. Okay, now ended 31st January 2020. Now, if this is ending on 31st January 2020, then obviously it started on 1st April 2019. You can count from 1st April 2019. From 1st of April 2019 to 31st of January 2020 is that exactly makes 10 months. Okay, so keep in mind these months. Okay, now these are revenue. First of all, this is the revenue number. And in operating expenses, you have depreciation. Depreciation means, see, this is your depreciation. Depreciation means your accounting depreciation. Depreciation means obviously accounting depreciation, and I'm going to add it back because accounting depreciation is never allowed. Okay, then you have one more head, that is employee cost. Okay, 142,400. But for that they have given the reference of note number 1. So definitely we need to check, we need to read the note number 1. Then again, lease motor car, for lease motor car we have to read note number 2. For other expenses there is a reference of note number 3. So definitely now I'll be reading note number 1, 2 and 3 for the details of these expenses. Okay, right? Let's move. You have property business income as well. Okay, it's not difficult, accrual basis. Then there is profit on disposal of freehold office building. Definitely that disposal of freehold office building is a chargeable event, and that means it's a clear hint of chargeable gains. Now let's move on to the note number 1. Let's see what is this. In note number 1, the first line is counseling services provided to employee who were made redundant. This is full time allowed. If you are, in simple terms, if you are spending on your employees, if you are spending on your employees, it's full time allowed. Okay, so no need to add it back. My dear student, hope you remember the rules. We only add back those expenses which are not allowed in tax, not allowed in tax. Okay, so this is allowed, so we just need to write 0 for this. Then pension contribution on behalf of employees, allowed expense. Yes, if employer is contributing in employees registered pension scheme, that's totally allowed. Again, employer class 1 national NIC, this again, this NIC, employer pay for employees, employer pay for employees. Day before yesterday we studied this. On the day 3 we studied this, that if employer is paying, if employer is paying NICs for employees, that's totally allowed from trading income. This is also allowed. Employer class 1A NIC payable on behalf on benefits. Yes, class 1A NIC is also allowed, you know, for non-cash benefits, because normally employer NICs, two NICs for employees, so these two are allowed. All both of them are allowed. Okay, now January 2020. In this question, our accounting period is ending on. In this question, our accounting period ending on 31st of January 2020. Okay, look at here. Employees bonuses declared, bonus is type of the salary, bonus is type of remuneration, it's part of remuneration, declared but unpaid, these will not be paid during 2020. During whole 2020 we won't pay. And look at here, our year end date is 31st January 2020, so still 11 months. After 31st January 2020, still 11 months of 2020 left. Now there is a law, there is a rule. Listen, if you haven't, if you are not going to pay, if you are not going to pay your employees salaries or bonuses or remuneration 9 months after the year end, then such salaries are not allowed. Such salaries are not allowed. I repeat, this is a different and new thing, and I must say this is a non-routine thing. If you are not going to pay, if company or employer is not going to pay the salaries, bonuses 9 months after the year end, 9 months, don't forget the law, 9 months after the year end, such salaries are not allowed. So see, what's our intention? We are not going to pay till the end of 2020, and end of 2020 means 11 months. Still 11 months are left, still 11 months are left, so this is not allowed. This 10400 is not allowed, and you guys will see, I will add it back, I'll add it back. And then what is written, the remaining balance is all allowed, remaining balance is all allowed. Okay, got it? Next, then it is written note to lease of motor car. Lease of motor car, the lease is in respect of a motor car with a CO2 emission of 105 grams per kilometer. Now hold, it's very easy. You studied this in trading income chapter. You know, whenever you got a leased car, you got a leased car rental issue, just simply check the CO2 emission rate of that car. If the CO2 emission rate of that car is greater than 110, if the CO2 emission rate of that car is greater than 110, that means that car is creating pollution in the environment, that car is damaging the environment, so there is a punishment. There is a punishment, and what's the law says? Punishment is 15% of the lease rental not allowed. If CO2 is greater than 110, then 15% of the lease rental not allowed, and you need to add back 15%. But my dear students, if CO2 is less than 110, if CO2 is less than 110, then no punishment, just ignore it. Complete lease rental is allowed, complete lease rental is allowed. Now open your eyes and check the CO2, open your eyes and check the CO2. So CO2 is just 105, CO2 is just 105, so no more punishment, no more punishment in that question. A complete rental is allowed, complete rental is allowed. Okay, Just wait a minute for azan. Wait a minute. Now, my dear student, note number 3. Note number 3 is entertaining UK suppliers and customers. Now listen, right now we are not doing VAT. One of the biggest mistake I want to highlight. We are not doing VAT. In VAT, listen, first let me recall you VAT. In VAT, all you cannot claim input VAT on any entertainment suppliers and customers except for entertaining overseas customers, right? You remember in VAT entertaining overseas customers you can claim for entertaining overseas customers you can claim input VAT. But in trading income, very strict rules. In trading income, either it is UK or foreign customer, no entertainment customers allowed, strictly not allowed, no entertainment customers and suppliers allowed. Okay, so entertaining UK customers 1920 not allowed, so we need to add back. Entertaining overseas customers not allowed, this is trading income, please. Qualifying charitable donations, again this is not allowed. Why? Qualifying charitable donation is allowed from the main format. Qualifying QCD is allowed from the main format of corporation tax, not from trading income. Okay, be careful. Then the balance expenditure allowed, okay. Now again you have property income, but first thing, my dear, we are not doing individuals right now, we are doing companies. This is companies property income. The first thing is, for companies property income is calculated on accrual basis. Let me write the accounting period. Hope you remember 10 months accounting period. Our accounting period is this. See, 1st of April 19 to 31st of January 2020. See, this is your accounting period. In this question, 1st of April 19 to 31st January 2020, exactly 10 months. Now, if you want to write on paper and pen, you can keep a paper pen with you so that you can better understand, right? If you want to write months, but keep this 10 months in your mind. And listen, we have to take only 10 months rental income, 10 months expenses, and no need to see the payment dates. Just do work on accrual basis. Okay, let's start. Last orders limited let out a furnished office building. The following income and expenditure received and incurred during the final 12 months. No issue, they have written the word 12 months here, but our accounting period is just 10 months. So be careful, we just have to make period. Feb and March 2019 lies on the previous accounting period. From April 19 to July 19, these 4 months are from our accounting period. Okay, so we'll only include 4 months from this. Be careful. Then insurance for the 12 months, exactly 12 months to 31st January 2020. This insurance of 1800, this insurance of 1800 is for exactly 12 months to 31st January 2020, and our accounting period is only 10 months, so we need to apportion this by multiply 10 upon 12. We need to apportion this because of accrual basis, okay, for 10 months. Then on 1st August 19, we received rent for the 6 months ended 31st January 2020. Yes, this 1922 19,200 exactly belongs to our 6 months. Our 6 months are accounting period. So in short, you can also do like this. If you add these two 19,200, 119,200 is for 6 months. So if you add these two 19,200, you will get 12 months rent. If you add these two 19,200, you will get 12 months rent, and then you can multiply it with 10 upon 12. So exactly you will get 10 months rent. This is the one way you can do it as well. Then repairs following a fire not covered insurance. Repairs following a fire not covered insurance. Repairs following a fire not covered by insurance. See, repairs is full time allowed, and this lies in our accounting period. It's a one-off expenditure, so complete 7700 is allowed. Complete 7700 is allowed. So this working is very simple. You have to take 10 months rental income. Listen, let me tell you the summary. You have to take 10 months rental income, you have to take 10 months insurance, and then you have to take 7700 repairs. In this way, easy peasy calculation of property income. Okay, now disposal of freehold office building. Disposal of freehold office building. This note number 5 relates to chargeable gains. Obviously, freehold office building is a chargeable asset. Freehold office building is a chargeable asset. Okay, the office building was sold on 31st of January 2020. The profit has been calculated as disposal proceed of 126,800. This is DP less original cost. I hope you remember, DP less original cost will give you unindexed gain. Now what is the indexation allowance? Ready-made indexation allowance is given, that is 12900. So that means DP less cost, unindexed gain less indexation allowance is 12900. So automatically you will get chargeable gain. The office building was never used for business purpose. No issue. Right? Okay, still it's a chargeable gain. Okay, so very simple chargeable gain working can be done through this. Now easy. I hope you remember day three I gave you a recap of capital allowances, right? And in that recap I emphasize on one thing, that at the time of closure of business, at the time of cessation, the last accounting period of business, listen, look at me, whenever you find the last accounting period of business, how you will go, how you going to work the capital allowance? Listen, no AIA, no WDA 18%, no WDA 6%, no AIAs, no WDAs, nothing. Only you have to calculate real depreciation. Real depreciation means balancing adjustments. Only you have to do real depreciation, that is called balancing adjustment. Just do balancing adjustment, balancing allowance or balancing charge on each and everything, even on main pool, even on special rate pool. Don't forget. And these workings are easy, comparatively easy. It takes less time. When you get closure of business, when you get a question of capital allowance of closure of business, it takes 1 minute or 2 minutes to solve it. Okay, now read it. On 1st April 2019, the tax written down value of last orders limited main pool was 24,200. Now if you want to do it logically, wait, if you want to do it logically, because I am also accounting teacher, listen, Just imagine this 24,200 is the cost. You bought assets for 24,200. Just think, all of you start thinking like that, that you just bought these assets for 24,200. Okay, this is your cost. All of the items included in the main pool were sold for 13,600 on 31st January 2020. Easy, easy. Look at me. You bought assets, just think, you bought asset for 24,200 and you sold it for 13,600. You bought it for 24,200 and you sold it for 13,600. Now you tell me, what is the real decrease in value? What is the real decrease in value? What is the real depreciation? Whatever will be the real decrease in value, that's your capital allowance. That's it. You don't need to apply any percentages, any rates, no more estimations, only reality based depreciation. This is what we call reality based depreciation. So again I repeat, you bought these assets for 24,200 and you sold it for 13,600. So no need to do working, even you are not required to do working, no more main pool, nothing. Just write in a brackets 24,200 less 13,600. You will get real depreciation. You will get real depreciation, means capital allowance, means balancing allowance. You will calculate balancing allowance. That's it. With none of the items sold more than their original cost. That's also very important. If you know, whenever during disposal, I taught you on day 3 as well, and you must have done this also, that what amount is deducted from disposal amount, what amount, whenever an asset is disposed of, you have to write lower of cost and dp. You have to write lower of cost and dp. So they have clearly identified that none of the items sold for more than their original cost. That means dp is lower. That means dp is lower. So this figure is correct. This figure is correct. Okay. Now, last order limited has previously always made up its accounts to 31st March. Both Gastro Limited and Gourmet Limited are profitable and make up their accounts to 31st March. Very good hints. You know, one of these companies, Gastro or Gourmet, let me check, I will check. One of these company is part of 75% group. One of these, Gastro or Gourmet, the one with 80% holding, the one with 80% holding is part of your 75% group. And you know, last class, I'm just talking about yesterday's class, whenever you need to transfer your trading loss or any loss in using 75% group, you need to check the accounting period. Make sure your accounting periods are properly aligned. But there is a problem here. See, our group members making accounts from to 31st March, our group members making accounts to 31st March, but we did close our business on 31st January. That means our accounting period is 10 months and their accounting period is 12 months. Our accounting period is 10 months and their accounting period is 12 months. So in order to match with them, we need to apportion their profits into 10 upon 12. In order to match the transferable amount, we need to apportion their TTPs. Okay, right? Okay, let's read the requirement and let's finalize it. The first requirement: calculate last orders limited tax adjusted trading loss. Calculate last order limited tax adjusted trading loss for the 10 months period ended 31st January 2020. The first requirement is related to only trading loss. Okay, only trading income head, and obviously trading loss will come, so only work on trading income. On the day 1, when I was discussing some exam techniques, I told you always read these notes. Always, examiner has written this. I'm not telling you this, examiner has communicated this. Always read these guidance notes. Always read these guidance notes. What the guidance note says: your computation should commence with the operating loss figure of 276480. Operating loss figure of 276480, and should also list all of the items referred to in note number 1 to 3, indicating by the use of 0. Obviously, we all know this, that Where no adjustment is required, we write 0. Where no adjustment is required, we write 0. Okay, right? So from which number we'll start? 276480. 276480. Okay, you should assume that last orders limited claims the maximum possible capital allowances. Okay, complete capital allowance, whatever capital allowance is available, you need to claim, you have to claim. Okay, so we are doing the first requirement. Let me shift to my Excel sheet and let's do it. Okay, I'm switching off the camera so that you can see the screen completely. One more thing, to save our time, I have written the theory part. The text part I have already written. Look at here, I have written the text part so that we can save our time. Now the first thing is operating loss. The first thing is operating loss, that is 276480, and as it is the loss, so that's why I have written a negative number. You keep your question in front of you so that you don't have any problem. Now we all know that, go and check the accounting P&L. Accounting depreciation is never allowed. So you need to add back. So we need to add back 9460. We need to add back. Okay, then you can come to note number 1. Note number 1, counseling services full-time allowed. Employees pension contribution, I already told you, if employer is contributing for employee pension, allowed. Employer is contributing for employees NIC, allowed. Class 1A NIC, allowed. These all are allowed. As these things are allowed, that's why we don't need any adjustments. Now unpaid bonuses, unpaid bonuses, hope you remember, as the bonus will not be paid, we are not going to pay these bonus from 9 months from the end of the accounting period, so that's not allowed. Such bonuses are not allowed. I just told you that bonus is 10,400. Okay, then lease of motor car, as the CO2 was only 105, that's why no punishment. If CO2 is greater than 110, then there is a punishment of 15%. Then finally you have, my dear students, entertaining UK suppliers. I told you, in trading income, no entertainment of suppliers and customers allowed. So let's add it back. 1920, add back. Then you have entertaining overseas customers is 440. Then you have qualifying charitable donation. Qualifying charitable donations is 800. Okay, now for capital allowance you have to do, balancing allowance. Okay, so I already told you that you should do balancing adjustment. So just think, you bought, I repeat, you bought the asset for 24,200 and you sold it for 13,600. So the difference will obviously your real depreciation. Okay, let's calculate the real depreciation. Okay, so 10,600 is your real depreciation. 10,600 is your real depreciation. 10,600 is your real depreciation. Now what's the requirement? Just simply add all these numbers. Apply the sum formula, and you can easily do it. 264060 is your loss. This is the answer of your first requirement. My dear student, if you understood it, please hit a message on WhatsApp. Kindly. Balance expenditure is not a specific name. That's why one student asked the question. Balance expenditure is allowed, so no need to write anything. Okay, no need to write anything. It's not a specific name. That's why we are not writing zero even. That's why we are not writing zero even. Now let's go to the question again. Let's go to the question again. This is the question. Let's read the second requirement. Assuming that last orders limited claims relief for its trading loss against its total profits. Wait, don't go, don't run fast. Now, trading loss. Yesterday we did this. Trading loss of any period, even the last period. Look at me. Wait, let me turn on the camera. Look at here. Come on. My face. Yesterday we discussed that trading loss for companies for any accounting period, even the last accounting period, you can always set off the current period total profits you can set off. Current period total profit you can set off, and there is no partial claims allowed. You have to waste your QCD. Complete total profits you can set off. Okay. So now when your examiner is asking you to set off total profits from trading loss, so first you need to calculate total profits, my dear students. First you need to calculate total profits. And what comes in total profits? Look at me. What comes in total profit? Number one, trading. In total profits, company's total profit, number one, trading income comes. But in this question, trading income is already negative. In this question, trading income is already negative, so we write zero for that. Okay. But yes, in this question there is a property income. Yes, we just read it. There is a property income, so need calculation for property income. Number two, in this question there is a chargeable gain, so definitely we have to calculate chargeable gain. And one more thing, sometime it comes, sometime it doesn't, and that is interest income, loan relationship head. But in this question there is no interest income. In this question there is no interest income. Okay. So boys and girls, we first need to calculate total profit, and in order to calculate total profit, first we need to calculate property income and chargeable gains. Okay, then we'll set off the loss. Okay, let's move on to work for the working of property income. Okay, now it's better you keep your question in front of you. For property income, I already told you that we receive 6 months rent together, and 19,200 is the 6 months rent. So if you multiply, see the working, if you multiply 19,200 times 2, if you multiply 19,200 by 2, you will get the whole 12 months rent. And once you get the 12 months rent, you just have to multiply 10 upon 12, because accrual basis, and because your accounting period is 10 months. Okay, let me apply the formula. See this, 19,200 times 2, 19,200 times 2 into 10 upon 12, 19,200 times 2 into 10 upon 12. This is your 10 months rent. Okay, now next is your insurance. Insurance is definitely an expense. So 1,800, it will be deducted. 1,800 into 10 upon 12, 1,800 times 10 by 12. Okay, 1,500. Repairs is I think 7,700. Repairs is 7,700. Okay, so this is all your property income. Let's add it up. That let's net it off. Let's net it off. Let's net it off. 22,800 is your property income. 22,800 is your property income. 22,800 is your property income. Okay, now my dear students, let's move to chargeable gains working. Let's move to chargeable gains working. How we have to do chargeable gains working? The first thing is disposal proceed. The first thing is disposal proceed. Disposal proceed. What is the disposal proceed? What is the disposal proceed? I hope you remember. I hope you remember. Disposal proceed is 126,800. Check it out. Check it out. Check it out. 126,800. Then you have the cost of acquisition. We bought it for 79,400. 79,400. First calculate the unindexed gain. First calculate the unindexed gain. 47,400 is your unindexed gain. Now, what is the indexation allowance? What is the indexation allowance? Is 12,900. 12,900. Let's find out the final gain. 47,400 less 12,900. Okay, so 34,500 is your chargeable gain. 34,500 is your chargeable gain. Okay, so I've just calculated property income and chargeable gain in front of you. There is no, my dear students, interest income. There is no interest income, so just forget it. Let's calculate. Let's move to total profits. Let's move to total profits, because we need to set off total profits from trading loss as indicated in the requirement, as asked by examiner in the requirement. Okay, so first thing is property income. Let's pick it up. Equal, oh, let's go. This is 22,800. Then you have gains. Come on, go. Chargeable gains. Okay, so here you have property income and chargeable gains. There is no interest income and there is no trading profit, positive trading profit. There is no positive trading profit. We only, you know one thing, we only add positive numbers in total profits calculation. We only add positive numbers in total profits calculation. Come on, add it up. 57,300 is your total profit. Now hold. You have, I think, how much loss was available to you? See how much loss. 2646060. Check the screen. It's in front of you. 2644060. You have trading loss, tax adjusted trading loss. You can easily set off the total profits, and you know this thing, that you cannot do any planning in it. If you want to do current year set off, just do it completely. You can't save your QCD. Okay, let's do it. So in front of 57,300, obviously 57,300 loss will come. So here you will get here you will get 0. Okay, and just write QCD wasted, and again your TTP will also be 0. Okay, right? So in this way you showed it. Now for the, just for the purpose of this requirement, how much loss you had, how much loss was available to you? 264060. How much loss was available to you? 264060. And how much you use it? 57300. You used 57300. You used 57300. Okay, so still unrelieved loss. Just for this requirement you can write unrelieved, but it is, in reality it's not unrelieved. For this requirement you write this unrelieved loss. See, 260,760 is the unrelieved loss. Okay, but in reality, look at me, in reality, you know, as this is the last year of trade, as this is the last year of trade, you can go back 36 months with your own company. You can go back 36 months with your own company, plus you have members of 75% group in your groups, in your group of companies 70. So you can also transfer, it to your group members. Okay, now the last requirement is left. If you understood it, kindly hit a message. Come on, come on, come on. It's free. WhatsApp message is free. If you understood this, please hit. Yes, one question from a brother. Last 36 months is LIFO, not FIFO, LIFO, last in first out. Now, okay. Now the last requirement, the C requirement. Explain the alternative ways in which last orders limited unused trading loss for the 10 months period ended 31st January 2020 could be relieved. I just told you. What are the other options? Come on, what are the other options? Let's write the other options on WhatsApp. Tell me through WhatsApp. Tell me what are the other options. What are the other options you have for this unused trading loss? What are the other options? Come on, come on. Participate, please participate. What are the other options you have? Very good. One student told me 36 months back for with the same company, using terminal loss relief. 36 months back, 36 months back, you can go with your own company, and if you go 36 months back, which profits you will set off? Your own total profits, right? Okay, and one more option you have, as you are the member of 75% group, you can transfer this loss, to your group members, but don't forget to apportion their profits. As your accounting period is only 10 months, but their accounting period is 12 months. Their accounting period is 12 months. Okay, let's move. Let me show you the discussion. See this. Can you see the screen? Now, the trading loss can be relieved against last orders limited total profits. See, in the first instance, they are saying about the same company. Our company's name is Last Order. The trading loss can be relieved against last orders limited total profits for the previous 3 years. Latest year first. See, latest year first means LIFO, because it's a terminal loss. Now, one more option. The trading loss can be surrendered to Gastro Limited because there is a 75% group relationship. The amount surrendered will be restricted to 10 upon 12. See, 10 upon 12, I told you, of Gastro Limited, not ours. Gastro Limited, we are already on 10 months. The amount surrendered will be restricted to 10 by 12 of Gastro Limited's taxable total profits for the year ended 31st of March 2020. Okay, there is not a group relationship with government, because 20% holding, no group relationship, no such 75% group relationship. So no group relief claim is possible. Okay, Read it, please. Giving you 1 minute. So that's the end of this question. Now we are moving. Now we are moving to our planning area. We are moving to our planning area. See, first of all, for this area is normally considered as dangerous for all students. To be very honest, dangerous for all students because this area needs brain. This area needs memory, active response. That's why even I say one thing. This area has got a little touch of P6 ATX touch. That's why examiner has specifically written a separate article of advanced skills for this. Okay, you must read. Even I'll send you guys after the class on your WhatsApp group. Don't forget to read that article 2 or 3 times. Very important article. Okay, and normally 10 marks is routine from this area, and we never know which type of question they are going to give, but we have some past papers, so we have that example with us. Okay, now how can you run your business? Which forms can you select to run your business? Come on, look at me. No need to sleep now at all. No need to sleep. No option you have. If you run your business as a sole trader means individual, human being, human owner, human natural person owner. Okay, your income will be treated as trading income. You know this. If you are doing a business, your income will treat it as trading income. Now, day 3, I taught you all this on day 3. When you run your business as sole trader, your income is trading income. On trading income, you have to pay income tax, and that income is non-saving income. Okay, trading income is non-saving income. You have to pay class 2 NIC for yourself. You have to pay class 4 NIC for yourself. Yes, class 2 NIC is fixed, and class 4 NIC has rates percentage which you have in your kit. Okay, so these 3 things you have to pay when you are running your business as a sole trader. Then your income will be considered as trading income. Then your income will be considered as trading income. Okay, your income will be considered as trading income, and for trading income you have to pay income tax on non-saving income. For trading income you have to pay class 2 NIC for yourself and class 4 NIC for yourself. And yes, one more thing. These class 2 and class 4 NIC are not an allowed expense from your trading income PNL. These class 2 and class 4 NIC are not an allowed from your trading income PNL. So this is option number 1 for you guys. This is option number 1 for you guys. Option number 2, see this. Option number 2, I'll send you the slides. Don't worry, these slides will be delivered to you soon. Setting up a company. Now the second option is you incorporate a company. You incorporate a limited company and run business with company name. Now don't forget, still you are the whole sole owner. Still you are the whole sole owner, but you just want to change the form. You just want to change the form of business in order to save tax. You are applying different options, right? Setting up a company and run business with company name. Setting up a company and run business with company name. Now, if you run a business company with company name, now first of all profits belongs to company. All profits belongs to companies. First of all, there is a flat tax rate of 19%. We all know for companies the tax rate is 19%. Okay, but just compare it with the last scenario. Just compare it with the last scenario. If you are working as an individual and individual trading income, you have to pay non-saving income 20, 40 and 45. For non-saving income 20, 40 and 45. Now again, now if you run your business as a company, if you run your business as a company, so company is not a natural person. Company is not a natural person. Company won't get old like us. So company don't need, I told you on the day three, company don't need to pay any class 2 or class 4 NIC. Company don't need to pay any class 2 and class 4 NIC. So see, right now this looks attractive. Right now this deal looks attractive. This deal looks attractive to me. Why this deal looks attractive to me? Listen, because no need to pay 40, 45%, only pay 19% right now I'm saying, and no need to pay class 2 and class 4 NIC. So comparatively, at first instance, the company option looks good to me, the company option looks good to me. Read it. Now the issue is, my dear students, issue is, you have opened a company, you have incorporated a company, but now you have to extract money, you have to extract money from this company. So now again you have few options. See, this is very interesting area, how to extract profits from company, how to extract. Now if you go for company option, then one more problem, how to extract. Don't sleep, please, this is active topic. How to extract profits from company? The first option, you can be a director of that company, you can be a director of company and withdraw amounts in the form of salary, withdraw amounts in the form of salary. Now when you become the director of the company, director is still the employee. So you are employee and company is employer, you are employee and company is employer. Now please, day three is here. Your salary will be allowed expense. Whatever salary company will give to you, that will be an allowed expense, because employee salaries are allowed. Now company has to pay class 1 employer NIC for you, as the company is employer and you are employee. So company has to pay class 1 employer NIC for you, right? And look at me, that class 1 employer NIC is also allowed expense, just we did in last orders limited. Class 1 employer NIC is also an allowed expense for company. Don't forget, this is the game of memory, please. Now you as a director, now come to you, these are the consequences for company. Now look at you as a director, you receive the salary. You as a director, you are an employee, so your income will be employment income. You as a director, you are an employee, so your income will be employment income. So now for employment income, you have to pay income tax. You have to pay income tax on non-saving income. Now let's look at here. Now for employment income, you have to pay income tax on non-saving income, plus all employees in UK, pays class 1 employee NIC. All employees in UK have to bear class 1 employee NIC burden. Okay, so these are many things. Now just think, Company is paying class 1 employer NIC. Company is paying class 1 employer NIC. You as a director employee, you are paying class 1 employee NIC. You are also paying income tax. You are also paying income tax on non-saving rate. Okay. Now company must pay one more thing. When company is employer, you are employee. When company is employer, you are employee. So company has to deduct pay as well. Pay. Day 3. Company has to deduct pay to government on your company has must pay to government on your behalf. Come on, giving you 1 minute to read it. This is technical area. We can't go fast. Just go slow and think over it. Read it and think over it. Come on, 1 minute you have. I repeat, please read it, because this thing will come in your question. Next question is full of these things. Now one more option C. You let's think we have incorporated a company. Now to take out, we need to take out funds from the company. Obviously we have to run our show. We need to take out funds. So first option, we became director of the company. If we became director is an employee, and the consequences we just read. Okay. The second option, you just be a shareholder. Obviously we are shareholder, we are the 100% shareholder. This is our own company. So just be a shareholder and withdraw funds as a shareholder. Withdraw funds as a shareholder. Dividends. Withdraw funds as a dividend. Now hope you remember little bit accounting and even tax. Dividends are not an allowed expense for company. See, when you become when you become employee of company, the salary is obviously allowed expense. We just read it now. But when you become the shareholder, the ordinary dividends are not allowed. But company don't need to pay class 1 employer NIC. As you are no more an employee, you are just a shareholder. In this case you are just a shareholder, so no more NICs. Not on the company's part, not on you, because neither your company is employer nor you are employee. Okay, so no more NICs here in this game. No more. As an individual, you just need to pay income tax on dividends. Okay, now you receive, as an individual you are receiving dividend income. As an individual you are receiving dividend income, and we all know the tax rate of dividend income. First band is 77.5, then 32.5, and then 38.1. 7.5%, 32.5%, and 38.1%. Okay. Now one more thing. When you get dividend income, there is an NRB of 2000. I hope you remember. Dividend NRB is 2000. Okay. You as an individual no need to pay any class 1 employee NIC. You as an individual no need to pay any class 1 employee NIC. Read it. Again giving you 1 minute. To read. Okay, now let's take a short break of 6 to 7 minutes, and then get yourself refreshed, and then we'll continue the questions. Okay, right? Okay, welcome back. So we are going to do the first question. Ali Mark, let me send you the question on WhatsApp. Wait. Okay, I just sent. Okay, first of all, we are doing this question Ali Mark Limited. Okay, be very careful. There is a possibility many things will be given ready made to you. There is a possibility many things will be given ready made to you. Okay, let's start. You are a trainee, chartered certified accountant dealing with tax affairs of Jamila, who is managing director of and currently 100% shareholder of Alimag Limited. Okay, Alimag Limited, that means this is our own company. The same case I told you. That means they are running, this lady is running her business through a limited company in the form of limited company, and she is the whole soul. She is the whole sole owner of this company. Okay, be careful. For the year ended 5th April 2020, year ended 5th April means it start on 6th April 2019. That means exactly accounting period and fiscal year is aligned. Accounting period and fiscal year is aligned. Accounting period and fiscal year is exactly aligned. Okay. Now, Alimag Limited taxable total profit TTP before taking account of directors remuneration. That means we haven't deduct any directors remuneration. We have not deduct any directors remuneration from our corporation tax working. And yes, directors remuneration are allowed expenses. Directors remuneration are allowed expenses for from corporation tax, you know, as a trading income deduction. Okay, don't forget. Now, what's the original plan which they are following? What's the original? Jamila originally intended to withdraw intended to withdraw 125,000 of the profits as a director's remuneration, and you have calculated mean this thing is already done. This thing is already done, and this is ready made. This is ready made given to you. See the that this approach would result in the following tax liabilities and NICs. See, now let me tell you, if Jamila is the director, director means employee, then limited company is the employer. Then whatever salary company will give to Jamila, it's allowed expense, number one. Number two, when company is the employer, company has to pay class 1 employer NIC for Jamila. Now come to Jamila. Jamila is employee. She has to pay income tax on employment income, non-saving income tax, and she has to bear class 1 employee NIC as well. And last but not the least, company has to pay corporation tax as well. Company has to pay corporation tax as well, obviously, 19%. So these are the ready-made workings. See, in this scenario, what is the corporation tax? 7399. What is the class 1 employer NIC? 16059. What is the income tax? Is 42,500. Income tax for Jamila, that is non-saving income tax, and then class 1 employee NIC 6464. And just think over it that this whole setup belongs to Jamila. Jamila has planned to run the business through the company, so all costs belong to Jamila. Finally, all costs is belongs to Jamila, right? There no other shareholders for this company. Whole sole Jamila's business, right? So the total cost in this first scenario is 72422. 72422, right? These things are ready made given in the question. Now they will give you other plans. They will give you other options, that if you go there, you go there, can you save tax or not? Then you have to decide and plan, and then you have to decide and plan, and you have to guide. Okay, right? And just think you are a tax practitioner. You run a tax firm and you are going to advise a client. You run a tax firm and you going to advise your client. Okay, see, revised basis. What is the revised basis? After a meeting After a meeting with Jamila, a more beneficial approach to withdrawing 125,000. See, she wanted, in the original plan, she wanted to withdraw 125,000, right? She wanted to withdraw 125,000, but one short salary. In that option, she was withdrawing as one short salary. Please look at me carefully. One short salary. One short salary. Now, of profits from has been agreed for the tax year 1920. Now there, what's the other option? This is the other option. We are, Jamila will now withdraw gross director remuneration of only 25,000. In this second scenario, in this new option, Jamila won't be withdrawing complete 125,000 as a salary, but yes, only 25,000 as a salary. Now Jamila's husband Magnus will become a 25% shareholder in Alimag Limited. Okay, see this. Alimag Limited will then pay dividend of 75,000 to Jamila and 25,000 to Magnus, right? That means both husband and wife will receive some dividend income. Both husband and wife will receive some dividend income. Now, what's the requirement? Neither Jamila nor Magnus will have any other income for the tax year 1920. Thank God, thank God. Simplified. Now calculate the overall savings of taxes and NIC for the tax year 1920 if the revised basis of profit extraction is used instead of the original basis of profit extraction. Original basis of profit extraction. Okay, now let's think over it. First of all, think about Jamila. Company's taxable profits, that means just think it, company's trading profit is 180,000. Okay, now look at it. Company will pay, in this scenario, company will pay 25,000 salary. 25,000 salary to Jamila. Yes, salary is an allowed expense. I taught you before the break, salary is an allowed expense. So from company's profits, think over it, from company's profit, I am going to deduct the salary. Now when company is giving salary to Jamila, so obviously Jamila is employee, so company has to pay class 1 employer NIC. Company will have to pay class 1 employer NIC to government on behalf of Jamila. And my dear, look at here, and class 1 employer NIC is calculated on cash salary. Yes, is calculated on cash salary, and cash salary is given. So you need to calculate class 1 employer NIC. I am sure you have the rates of class 1 employer NIC with first band nil and the second band 13.8%. For class 1 employer NIC, the first band is nil, and the second band is, look at here, and the second band is 13.8%. I'll calculate it for you. Don't worry, I'll show you. Okay, and now this class 1 employer NIC is also allowed expense for employer. This class 1 employer NIC is also allowed expense for employer. So my dear, in this case, two allowed expense for companies, two employer, two allowed expenses for companies. Number one, the salary of 25,000 is allowed. Number two, the class 1 employer NIC, which I am going to calculate, that will also be allowed. So from 180,000 profits, of companies, 180,000 profits of companies, the 25,000 salary and the class 1 employer NIC totally full-time allowed expense, and whatever final profit you will get, you will apply 19% on it. whatever final profit you will get, you will apply 19%. You will apply 19% on it. You will apply 19% on it. Okay. So in this way you will calculate the first corporation tax. Now for Jamila and Magnus must do tax computation. Why? Jamila is receiving two incomes. One is salary, that is employment income. Jamila is receiving two income. One is salary, that is employment income. The other is dividend income. So you will make two columns for Jamila: non-saving and dividend, okay. And you will do that kiddish tax computation, which we did on the first day, first 30 minutes of the day one, first 30 minutes of the day one, ANI and all that stuff which I taught you. You have to do for Jamila. And for Magnus you have to do the same, but luckily Magnus does not have any other income. Just he has dividends. He has dividends income of 25,000. He has dividend income of 25,000. Okay, so this way you have to do, right? Did you make your mind? Is my camera okay, or is camera is stuck? Somebody messaged me that the camera is stuck, or the camera is, can you see my movement? Tell me on WhatsApp, please. Okay, thank you. Now let's start. Let me show you the workings. Now first of all, see this. Look at here, look at the screen. What was the trading profit? If you follow me consistently, you will understand what is the trading profit of the company. 180,000, and it was written in clear cut words that this trading profit is before salaries. Okay, so the salary in this case 25,000. This salary 25,000 is allowed, and class 1 employer NIC. Now I'm going to invite all of you. I'm going to invite all of you to calculate class 1 employer NIC. Okay, come on, use your calculator. Come on, do it. What is the salary? 25,000 is the salary. Do it. 25,000 minus 8632. I think the first band is 8632. 25,000 minus 8632, first band is nil, and the excess is 13.8%. Excess is 13.8%. Do it. Let me show you class 1 employer NIC. Wait. This is class 1 employer NIC. See this. Let me enlarge you. 25,000 minus 8632 into 13.8%. 25,000 minus 8632 into 13.8%. Okay, that is 2258. Okay, see, I've done it now. So these two expenses are allowed from trading profit. These two expenses are allowed. So your final TTP is your final TTP is 152,742, and there is a flat tax rate for company is 19%. So this is also a cost. For Jamila, right? 29021 will be sent to government in the name of corporation tax. 29021 will be sent to government in the name of corporation tax. Okay, now this was the company side. Now come to the individuals. Please. Please. Let's work out on Jamila's working. You can easily understand it. Okay, Jamila as an employee received employment income of 25,000 and dividends of 75,000. So I'm just making two columns. No need to make interest column. No need to take write interest column. Now look at here. Non-saving is 25,000, dividend is 75. If you add it, your total income is 25 plus 75. Your total income is 25 plus 75. This is 100,000. There is no qualifying interest, boys and girls. There is no qualifying interest. So your net income, your total net income is 100. Your total net income is 100,000. We take net income on the side, and then we deduct gross gift aid. Gross gift aid. There is no gross gift aid. There is no gross PPC. So boys and girls, your ANI in this question, your ANI is exactly 1 lakh. Your ANI is exactly 100,000. Look at here. When your ANI is exactly 100,000, that means 0 to 100,000 you will be eligible for fixed. You will be eligible for fixed personal allowance of 12,500. You will be eligible for fixed personal allowance of 12,500. Okay. Now, what's your taxable income? What's your taxable income? 25 personal allowance is always deducted first from non-saving. First priority of personal allowance is non-saving. So 25,000 less 12,500 is taxable. Non-saving income is 12,500 and 75,000 is dividend. Okay. Now you remember your first band is see this, and you guys are no more kids. Within 15-20 days you have your paper. Within 20 days you have your paper. Now no, you are no more kids. Listen, first of all I'll pick non-saving income. And I'll knock the first band. So this non-saving income will easily come in the first band, and the first band non-saving rate is 20%. So 12,500 times 20%, the tax is 2,500. The tax is 2,500. Now just think, in your first band the official capacity was 37,500. The official capacity of first band, basic rate band, was 37,500, but you just use 12,500 for non-saving. So now still you have 25,000 capacity left. Still you have 25,000 capacity is left for dividend income. Okay. Now whenever you are asked to calculate tax on dividend, first of all always apply NRV. First NRV, then normal tax. First NRV, then normal tax. NRV of dividend is 2,000 irrespective of your status. NRV of dividend is 2,000 irrespective of your status. So first of all you will do 2,000 multiplied by 0%. This is 0. And there is one my famous dialogue. Those who studied from me, they know that I always say in the class many times that NRB consumes your band as well. NRB consumes your band as well. So 25,000 was the band capacity. Now deduct 2,000. Now only 23,000 is left. 23,000 is left. Okay, right. Now 23,000 times 7.5%, because dividends first rate band is 7.5%. Okay. Now how much was the total dividend? 75,000 was the total dividend. 75,000 was the total dividend. 2,000 we used in NRB. 23,000 tax we just computed. The remaining is 50,000. Remaining dividend is 50,000. And for remaining dividend, obviously dividends higher rate band is 32.5%. Look at here, see, this is done. So in this way Jamila has to pay income tax for herself of 20475. Okay. Now as Jamila is employee also, listen, I just told you in the lecture, as Jamila is employee also, so she has to pay class 1 employee NIC. She has to pay class 1 employee NIC on cash salary. What was the cash salary of Jamila? Think over it. Only 25,000. Only 25,000. Now take out the rates of class 1 employee NIC. For class 1 employee NIC, first band rate is nil. First band rate is nil. That means till 8632 it's nil. And then the second rate band is 12%. Second rate band is 12%. See the screen. See the screen. So 25,000 less 8632 times 12% will give you 1964. Will give you 1964. 1964. Okay. So this is also one cost on Jamila. This is also one cost on Jamila. Now students will ask one question. Sir, you have done everything, but you forgot the husband, Magnus. Magnus is also receiving dividend income of 25,000. Magnus is also receiving dividend income of 25,000. And now wait, when Magnus is receiving dividend income, there is no NICs on dividends. There is no NIC on dividend. There is no NIC on dividends. Okay. Now, for dividend income, there is only one income of Magnus. See this bracket. I've enlarged. I've just enlarged. Dividend income is 25,000. As there is no other income, this 25,000 will be net income, and this 25,000 will become ANI. And we all know when the ANI is less than 100,000, you get a fixed personal allowance of 12,500. You get a fixed personal allowance of 12,500. So from 25,000, you will deduct personal allowance of 12,500. Your final taxable income will be 12,500. Okay. Now let's compute the tax. Whenever you compute tax on dividend, always 2000 NRV is available. 2000 is of NRV is available for each and every individual. For each and every individual, right? So 2000 times 0% is 0, and 10,500 the excess amount, obviously on the basic rate band, because the basic rate band is 37,500. So husband Magnus has to pay 787.5. 787.5. Okay, now look at the big picture. Look at the big picture, please. Look at the big picture. Let me highlight all the costs. Let me highlight. We are on the final area. Okay, let me highlight all the costs first. They have to pay corporation tax. Obviously they all are one unit. This company is their own company, right? Corporation tax, see, I have highlighted. They have to give this amount to class 1 employee NIC. They have to give class 1 employer NIC. They have to pay this income tax for Jamila and this income tax for Magnus. See, these all are the costs which you have to pay to government. Check it out. I have just circled it with blue pen. See, 29021 is the corporation tax, 20475 is the ITL, income tax liability of Jamila, 1964 is the class 1 employee NIC, 2258 is the class 1 employer NIC, 787.5 is the dividend tax on Magnus. Right? Now let's compare whether this option is good or bad. Whether this option is good or bad. Giving you 30 seconds just to look at this picture. Okay, now this is the planning area. This is the planning area. See, we have to compare two package. Existing package, check your question. Existing total taxes were 72422. Existing total taxes were 72422. Now let's line up the new taxes. The first one is income tax for Jamila is 20475. 20475. Okay, then class 1 employee NIC is 1964. 1964. Okay, then class 1 employer NIC is 2258. Okay, then Magnus income tax is 787.5. 787.5. Finally, they have to pay corporation tax, that is 29021. 29021. Okay, there will be, now wait, let's add this packet, let's add it up. Wait, you also do it. 20475 plus 1964, add 2258, add 787.5, add 29021. 5405. Almost round off. If I round 540, sorry, 54505. Sorry. Okay, so you can see, you can compare which package is better. In the existing package, you were paying taxes of 72422, but in the new package, in the revised package, you just have to pay tax of 54505. So my dear student, obviously there is a net tax savings. How much is the tax saving? Let's take the difference. 72422. Wait, 17916 or 917. There will be a net savings of 17917. That's the end of this first question. That's the end of this first question. Check it out. Check it out. Okay, if you understood this question, this was a technical question. If you understood this question, please, all those who are attending the class, please hit a message. Please write a message on WhatsApp. On WhatsApp, please. Uh, it's 787.5. Magnus tax is 787.5. Somebody saying that the revised packet is 61593. Is this true? Can you guys add it up again? I think it's 54. Please, can you do calculation for me? Somebody saying me that the revised package is different. 20475. I think it's 5. Please do the calculation again. Yes, let me recheck the values. 20475 is correct, 1964 is correct, 2258 is correct, 787.5 and 29021. Yes, I copied exactly all the correct figures. Can you recheck? 20475, 1964, 2258, 787.5, and 29021. My answer is correct. Okay. Let's move on to the next question. For this question, students, you have to use a little bit of your brain, and I'll give you some evidences as well. Because in the question they have given you some ready-made numbers. In the question they have given you some ready-made numbers, okay, but I have the evidence for this. But please keep a calculator with you and a paper and pen so that you can verify things, easily. Now, Sophia Wong has been self-employed as a lawyer for many years. For the year ended 5th April 2020, for the year ended, that means again your accounting period and fiscal year is exactly aligned. Your accounting period is 6th of April 2019, 6th of April 2019 to 5th of April 2020, 6th April 2019 to 5th April 2020. Sophia has forecast that her tax adjusted trading profit will be 80,000. Okay, this is self-employed, that means this is the trading income, this is the trading income of 80,000 she is expecting. Now this will her only income for the tax year 1920. Open your eyes, something is given ready-made. Sophia total income tax liability and national NIC, national insurance contribution, for the year if she continues to trade on a self-employed basis. I taught you today in my slides, in the same slides I taught you that when you are a sole trader, running a trading business, so your income will be treated as trading income. You have to pay income tax on that trading income, non-saving income. You have to pay class 2 NIC and class 4. Look at here. So this is the existing tax. This is the existing tax this lady is paying. Okay, now she wants to do some planning, she wants to save some tax, so she hired you as a tax practitioner, right, as a tax advisor. Sophia understand that she could save tax and NIC, if she instead traded as a limited company, C, and she is therefore considering incorporating her business. Incorporating her business means starting working like a limited company. On 6th April 2019, the forecast taxable total profit, the forecast taxable total profits of the new limited company for the year ended 5th April 2020 are unchanged at 80,000, before taking account of any director's remuneration, okay, the same whatever she was earning as a sole trader. Now obviously the form of business changed, only the form of business is changed, nothing else. So this 80,000 will be the company's profit, okay. Now few ready-made things for you, assuming Sophia Wong incorporates her income, her business. Assuming Sophia Wong incorporates her business on 6th of April 2019, advise her whether or not there will be an overall saving of tax, and national insurance contribution for the tax year 1920 if she withdraws all of the profits, everything, clean the company, all of the profits from the new company as number one. See two parts: directors remuneration after allowing employer class 1 employer NIC. Gross director remuneration will be 71346. This is very technical point. I hope you will understand. I'll try my best. See, her intentions are to withdraw complete 80,000 from the company. Now just think, if she withdraws complete 80,000 as a salary, if she withdraw complete 80,000 as a salary, then company has to pay class 1 employer NIC on that. So 80,000 is the salary plus extra amount of class 1 employer NIC. This will create a loss. This will create a loss in the company's books, and she does not want to create loss. She just want to make the profit zero. She just wants to withdraw everything. She just wants to withdraw everything. That means final figure should be zero. So can you see here? See, I have just done a balancing number here. I've just done a balancing number here. 80,000 is the profit. 80,000 is the profit. 71346 is the salary. 71346 is the salary, and in the bottom we want zero. In the bottom we want zero. So automatically the balancing figure for class 1 employer NIC is 8654. The balancing figure for class 1 employer NIC is 8654. The first method is do it through balancing figure. Do it through balancing figure. 8654 may come as a balancing number, but some students say, sir, we can't understand this balancing number. So I give them evidence. I invite them to calculate class 1 employer NIC with this salary. Class 1 employer NIC using the salary of 7136346. 71346. All of you, come on, do it. All of you do it. Come on. Keep the salary 71346 and apply the class 1 employer NIC calculation. Apply the class 1 employer NIC calculation. Come on, do it. See, 8654, and again I'm telling you one thing. See, I've also calculated in front of you. What are the rates of class 1 employer NIC? 71346. The first band is 8632. If you deduct first band, the excess will be taxable at 13.8%. So exact 8654. Okay. So this number is verified. Don't worry. And through this, your final taxable profit will be zero. And that's what's the plan of Sophia. She does not want to leave anything in the company. She wants to clean all profits. Okay. So you have two options in this question. The first option is withdraw as a in the form of salary. The second option is withdraw dividends of 64,800. I'll tell you why not 80,000. I will tell you why not 80,000 dividend. I will tell you. Don't worry. Wait, Azan. Okay, so what's the theme of this question? Existing setup is she was running a sole trader trading business, and these were the existing costs, 23979. Now she just incorporated a limited company with the same profit, 80,000, and now she will withdraw these profits. She will withdraw these profits from the company in one of the form. The first form is she will treat herself as an employee, and she will withdraw salary of 71346 with class 1 employer NIC of 8654. This is the first option we already discussed. And the second option is she will withdraw as a dividend. Okay, right? So we have to solve two times. We have to solve this question two times, but let's take a short prayers break, Maghrib prayers break. Okay, 8 to 9 minutes, and then we'll resume it. Okay, thank you. Okay, welcome back. Let's start the last session. Okay, just we discussed right now that this lady was doing a sole trader business with the following taxes. 23979 was the existing tax cost. Now she is planning to incorporate a limited company. She is planning to incorporate a limited company. Okay, so with this limited company, she will have the same profits, 80,000. Now she wants to withdraw these profits from with two options. The first option is this: withdraw in the form of salary, be a director of the company, and withdraw director remuneration of 71346. Okay, and then in this case, what are the consequences? In this case, company will have to pay class 1 employer NIC, obviously, and we have just calculated it. And in this case, Sophia has to pay income tax on employment income, plus as Sophia is now employee, so Sophia has to pay class 1 employee NIC. So Sophia has to pay class 1 employee NIC. Okay, let's do it. Let's do this first option. Let's do this. Let's check the first option. Come on, see this. Option number 1: if she withdraws in the form of salary, if she withdraws in the form of salary, we have already seen this. See, in this case there is no corporation tax. In this first option there is no corporation tax. Why? 80,000 is the profit, and this salary is allowed expense. Salary plus class 1 employer NIC, both are allowed expense. So company's total profit TTP is 0. In the first case, company's TTP will be 0. In the first case, company's TTP will be 0. So there is no corporation tax liability in the first case. There is no corporation tax liability in the first case when this lady is employee of the company. Okay, look at the screen. Now, what are the other consequences? Now, she just got the salary. She just got the salary of 71346. She just got the salary of 71346. That salary is employment income, and employment income is definitely a non-saving income. Come on, open your eyes. Now, as she has only this employment income, no other income, so this will be her net income, and she will do the side working. No gift aid donations, no gross personal pension contribution. So definitely the ANI is also 71346. And when your ANI is less than 1 lakh, you get personal allowance of 12,500. You get the personal allowance of 12,500. Okay, so in this case, you will have a taxable income of 58846. Now, let's calculate the tax. Very simple. This 58846 is your non-saving taxable income. So you know the band limits. The first band is 37,500. The first band is 37,500. So you will apply 20% on 37,500. And now let's calculate the extra amount. 58846 minus 37,500. 58846 minus 37,500 is 21346, and obviously this 21346 will come in the second band rate, and that is 40%. So here you have ITL. That is income tax liability. Here you go. Income tax liability is 16038. Now, obviously, as Sophia is employee right now, in this case, Sophia is employee right now. So if she is employee, she has to bear the burden of class 1 employee NIC. My dear boys and girls, please keep the rates of class 1 employee NIC in front of you. Her total cash salary, 71346. Let's do it. The first band of class 1 employee NIC is 8632. So 8632 will apply 0%. No need to show this, but I've shown this here. Okay, so for first 8632 is 0%. The second band is from 8632 to 50,000. From 8632 to 50,000, you can check the capacity. This will come out to be 41368. And on the second band of class 1 employee NIC, you have a tax rate, you have a rate of 12%. You have a rate of 12%. Okay, now then the extra over and above 71346 minus 50,000, the over and above amount will go in the last band, and the last band tax rate is 2%. Last band tax rate is 2%. So you can check the class 1 employee NIC is 5390. This is also one of the burden she has to bear. So again let me sum up. In the option number 1, she withdrew everything as a salary and class 1 employer NIC. So no more TTP with the company. Company's taxable profits is 0. So no corporation tax in this case. No corporation tax liability arises in this case. Number 1. Number 2, as she just received salary, that means employment income, she has to pay income tax. This is the income tax 16038. Number 2, as she is employee and she has a salary, so she has to bear class 1 employee NIC burden, which is in front of you, 5390. And one more thing, as this company belongs to Sophia, so Sophia has to pay class 1 employer NIC as well. Now let's sum up the numbers. Income tax is how much? Income tax is 16038, and class 1 employee NIC is 5390, and class 1 employer NIC is 8654, and corporation tax is nil. In this case, corporation tax is nil. Can you calculate the total cost? Let me do it. 16038 plus 5390 plus 8654, 30082. 30082. Now can you compare it with the existing package? Hope you remember. See the question, what was the existing package? I think existing cost of all taxes was, I think, 23,000 something. So this planning is not beneficial as compared to original setup. See the final comments. This planning is not beneficial as compared to the final setup. You can check. Giving you 1 minute to think. 1 minute to think. In this case, the total cost is 30082. And what was the original plan? Original plan was only 23,000 something. So this is more costly. So no need to go for this. Okay, I have a question for all of you. Let's say, and this is a quiz, a short quiz. Be active. In this way, you will be active. I remember on day 3, I taught you employer allowance. So if there is an employer and allowance on class 1 employer NIC, there is an employer allowance on class 1 employer NIC of 3,000. So you may ask this question, sir, why didn't you deduct 3,000 from this 8654? 8654, 3,000, each and every employer is allowed to use that employer allowance. Why didn't I deduct that 3,000 from class 1 employer NIC? Why didn't I deduct this 3,000 from class 1 employer NIC? Can anybody answer? Can anybody answer this question through WhatsApp? Why didn't I deduct 3000 class 1 employer NIC from 8654? That's a relief which we studied. Very good. One answer is almost partially correct. All of you, please cooperate. But my dear student, please cooperate. Please involve in the class. Get yourself involved in the class. Only one student. Yes, now correct answer. You know, in your NIC chapter you studied, sometime people creates, listen the theme of this issue. Theme. Actually, government has given employment allowance to motivate employers to hire more employees, so that a little cost come to the employer, and employer gets motivated to hire people. In this way employment will go up. In this way employment will go up in the UK. But what, sometimes people create artificial companies like this. In this company, Sophia does not need the company setup. She artificially created the company, and she was the only owner and employee. She treated herself as an employee, so there is no extra employment in the UK because of this. So the law is, when there is a company and the company has one employee and he or she is the director, so that means this is not genuine employment, and in that case no employment allowance is available. In that case no employment allowance is available. Look at the theme of this story. Because of this, no more employment in the UK. The objective of that employment allowance to create more jobs in the UK. You're not getting. Did you get it? Reply please. Okay, thank you. Now now let's move to the second option. The second option is, she can now tell me, what are the profits? What are the profits of the company? 80,000. 80,000. But wait, let me tell you one accounting word. This 80,000 is profit before tax. The correct word. You all know accounting. This 80,000 is not profit after tax. This is before tax. Still we need to calculate corporation tax on it. Now my question is, listen, do company distribute profit before tax to the shareholder or profit after tax? Which profits are distributed to shareholders? Profit before tax or profit after tax? Accounting question, simple accounting question. Yes, correct answer. Obviously profit after tax is distributed. And this is profit before tax. So first of all we need to calculate tax, and we need to give tax to government, and the remaining amount we can withdraw from the company, because company has to pay tax as well. And in the second scenario, second scenario, let's look at here. In the second scenario, there is no salaries, so there are no allowed expenses. Dividends are never ever allowed expenses. So we'll directly apply 19%. We'll directly apply 19% tax on this 80,000. Come on, all of you take out your calculator. Please. Apply 19% on 80,000. Apply 19% on 80,000. You will get 15,200. Now just think, out of this 80,000, 15,200 will be given to government as a corporation tax. So what else will be left? What else will be left? 15. What else will be left? 64,800 will be left. That's why it is written C. 64,800 will be distributed as a dividend. 64,800 will be distributed as a dividend. Now see, go easy, go easy. Listen. First of all, let's start with the company. Company has TTP or profit before tax of 80,000. Now company will pay 19% tax. This is 15,200 is the tax. 15,000 is the 200 is the tax. And what is this? This is 64,800 is profit after tax. This 64,800 is profit after tax. PAT, profit after tax. Okay, 64,800 is profit after tax. Profit after tax. Okay, so now 64,800 will be given to Sophia as a dividend. 64,800 Sophia will receive as a dividend from the company. Now wait, sir, do we need to pay any NICs on dividend? No, 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 big no. Do we need to pay any NIC on dividend? Big no. No, 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 no NICs on dividend. Okay, now so dividend is 64. Now let's calculate normal tax on dividend income for Sophia. Sophia has no other income, just dividend income. Okay, so this dividend income will be her total income. This dividend income will be her net income, and obviously this dividend income will become her ANI. Okay, and as the ANI adjusted net income is less than 1 lakh, so obviously she is eligible for personal allowance of 12,500. She is eligible for personal allowance of 12,500. Okay, so deduct 64,800 less personal allowance 12,500. Taxable income will be 52,300. Taxable income will be 52,300 is your taxable income. 52,300 will be your taxable income. Okay, now simply apply dividend rates. You all know, we all know, for dividend always there is a 2000 NRB. For dividend there is a 2000 NRB. Look at here, for the first 2000 you will apply 0%. Now the first band is 37,500. Out of this 37,500 you have already used 2000, so the remaining first band is 35,500. Obviously you will apply 7.5% on it. Now your first band is totally consumed. The excess will come in the second band, that is higher rate band, and the 14,800 times 32.5%. 32.5%. So you will have the total income tax of 7472.5. Please, you can use your own calculator as well. 7472.5. Okay, now we are ready for this second package. We are ready to calculate tax for this second package. In this second package there is no class 1 employee NIC, there is no class 1 employer NIC. In this second package there is no class 1 employee NIC, and there is no class 1 employer NIC. Okay, let's work out second package. In the second package you have to pay corporation tax of 15,200. Okay, you have to pay income tax of 7. Yeah, this is the income tax 7472.5. And in the second package there is no NIC. Come on, add it up. 15,200 22672 22672, right? 0.5, ignore the 0.5. Now yes, this is cheaper than the original package. Tell me the original package. Original package was 23979. Original package was 23979, and this is 22672. Yes, so by incorporating a company, listen the words, by incorporating the company and withdraw funds as a dividend, Sophia can save tax. Yes, let's take the difference. So minus 23979 is 1306. Sophia can save 1307. Okay. That's the final answer. That's the final answer. Okay, that's the end of this question. Did you understood it? Did you understand, my dear? Tell me, WhatsApp. Now, I just we have some time left, so I just thought to teach you one very special area of tax, a non-routine area, but sometime it comes and it gives you loss of 2 or 4 marks. Okay, and that is interaction of VAT and capital allowance. Look at here, interaction of VAT and capital allowance. Look at the screen, but you need energy. This may give you 2 or 4 marks. It comes sometimes. Listen, first of all, the introduction. When you go to government to claim capital allowance, government allows capital allowance on your own cost, the real cost which is incurred by you. Government allows you, gives you capital allowance, yes, but on the real cost incurred by you. Okay, right? Now, case number 1. Okay, one more thing I told you and you know this. Registered trader can claim input VAT. Registered trader can claim input VAT on all, normally on all expenses, normally on all expenses except for some. Registered trader can claim input VAT. Yes. So okay, let's start the show. It's solved. It's totally solved, but please, you will understand. This guy is supply. Wait. This guy is supplier and we are manufacturer. See, we are solving for this manufacturer. I'm teaching you the topic of capital allowance for this manufacturer just bought a machine from supplier. Manufacturer just bought a machine from supplier and the selling price of machine is 10,000. Selling price of machine is 10,000, but supplier charged 20% VAT. So 10 plus 2, total amount is 12,000. That means initially manufacturer paid, initially, look at me on my camera. Initially manufacturer paid 12,000. Initially manufacturer paid how much? 12,000, right? But as the manufacturer is a registered guy, so manufacturer will go to government and he will claim back 2,000 out of this 12,000. Okay, so he paid, we can say yes, he paid 12,000 to supplier, but eventually, finally, he will get back 2,000. He will get back 2,000 from government. So what is the real cost? What is the real cost of machine? What is the real cost of machine for this manufacturer? This is only 10,000. Okay, so the real cost is 10,000. So now government will allow you capital allowances on your real cost. So see this. For capital allowances working, you will go for capital allowances working, you will take 10,000 in your main pool or special rate pool or any pool. You know this. Okay, for capital allowances working, you will take this 10,000 number in your main pool, special rate pool or any pool. Okay, let us say this is main pool. So you will write 18% first year, then 18% second year. At the end of year 2, this is the NBV. Now let me calculate you the sale as well. Now finally we sold it for 5,000. We sold it for 5,000. So 5,000 is our exclusive price. Okay, this is our price. This is our price. This 5,000 is our price. Okay, now 6724 minus 5,000, this is your balancing allowance. Now one more dodge. As look at me, as we are registered trader, so at the time of purchase we got input VAT. Yes, at the time of purchase we got input VAT. So at the time of sale, look at the screen, at the time of sale we are selling it for 5,000, but from the customer we will charge output VAT of 20%. So 20% of 5,000 is 1,000. So we'll take 6,000 from third party. We will be taking 6,000 from third party, but out of this 6,000, 1,000 we'll return as an output VAT to government. So what's our selling price? What's our price? Our price is only 5,000. See, our price is only 5,000. So our price will go in the capital allowances working. Okay, so be careful. Again, listen, in the capital allowances working, cost will also, the cost which we bear, which are borne by us, will go in the capital allowance working, and the selling price, which is purely our selling price, will go in the capital allowance working. Okay, see this. So we can say one thing, and I'll show you the summary. For registered trader, all of you open your ears and eyes. For registered trader, cost is exclusive amount. See, this 10,000 is exclusive, this 12,000 is inclusive. So what is our cost? 10,000 is our cost. This is exclusive amount. This is exclusive price. For registered trader, we'll compute capital allowances. For registered trader, we will compute capital allowance on exclusive price. Why? Because our cost is exclusive price. Why? Because government will return us input VAT. I'm just giving you 1 minute to think over it. You can't memorize it. This is logical game. This is logical topic. Value added tax is a very logical topic. You have 1 minute to check it. And if you understood this game, please hit a message. If you understood this concept, this was a technical concept, then tell me. Now let's move to the next slide. Yes, this type of question available in your kit. One student has asked you, and the name of this question is Starfish Limited. You can check in the corporation tax. There are other questions also possible, but Starfish, I remember. Starfish Limited is full of this topic. Starfish. See, I've also written the summary here. See, look at all of you. For registered trader, wait. See this summary. First read the summary. First line. For registered trader, cost is always exclusive amount and we'll claim capital allowances on exclusive amount. First read this with this summary only. This summary. Right now I've just taught you this line. I have just taught you this line, okay? The first three lines. No need to read the second para. No need to read the second para. Now you student may ask, sir, what if we are unregistered? Okay, yes, this is possible. Now see, if now the manufacturer is unregistered guy and he just bought a machine from a supplier. So same case, supplier sold the machine for 10,000 and at the time of sale he charged, the supplier charged 20% VAT, 20% VAT from us. So 10,000 plus 2,000 is 12,000. 10,000 plus 2,000 is 12,000. Okay, so now manufacturer just paid 12,000. Manufacturer just paid 12,000, and as this manufacturer is unregistered guy, so he is not eligible for any input tax recovery. He is not eligible for any input tax recovery. So now listen, this 12,000 is full and final cost for him. This 12,000 is full and final cost. Now he can't refund. He can't take refund. He can't claim any input VAT. So this 12,000 is full and final cost. So when the 12,000 is full and final cost, this 12,000 will go here. Now he'll claim. Now he'll claim capital allowances on 12,000 directly. Now he will claim. Now he will claim 12,000. He will claim capital allowances on 12,000 directly, right? Okay. So if you are alive, if you are active, you can make a summary that for unregistered guys, the cost is always inclusive amount. This 12,000 is inclusive amount. For unregistered guy, cost is always inclusive amount. Cost is always inclusive amount. Okay, so two summaries you have. For if you are registered, then you will claim capital allowances on exclusive amount. If you are unregistered, then you will claim capital allowance on inclusive amount. But there is one dodge, there is one great dodge, and those who just learn it, they do that mistake. There is a dodge. And what's the dodge? Wait, let's go to the summary. First, now we'll read all 3 points. For registered trader, cost is always exclusive amount and we'll claim capital allowances on exclusive amount. See, right? Because you will get the input VAT recovery. For unregistered boys and girls, for unregistered trader, cost is always inclusive of VAT and we'll claim capital allowances on inclusive amount. Now see the third line, one exception, one exception, one exception, one exception, one exception, one exception. Let me change the color. If you are registered, but you have bought car, car with slight private use, then cost is still inclusive amount and you will claim capital allowances on inclusive amount, right? Hope you remember, you cannot claim input VAT on cars. You cannot claim input VAT on cars with some private use. Even you are a registered guy, still you can't claim. I hope you remember these rules. So again, inclusive amount. Okay, so be careful with these things. These are dodgy things that you may lose marks. Be careful with this. This thing I already taught you, priority for AIA. Hope you remember. Whenever you want to use AIA, what is the priority? Always SRP asset first, then main pool asset, then short life asset, and then privately used asset by owner. Privately used asset by owner. Privately used asset by owner, right? Hope you remember this. Okay, one thing more I want to recall you. Maybe you all know this. See, for depool assets, there are few assets which are depool. Depool means separate assets, they go separately. And two major assets of depooling in our course, one is SLA, short life asset. One is SLA, that is short life asset. The other one is privately used asset by owner. They are depooled. So on depooled asset, whenever the depooled assets are sold, we do immediate balancing adjustment. Okay, right? We do immediate balancing adjustment. But for pool assets like main pool and special rate pool, main pool and special rate pool, we do balancing adjustment. Yes, we do, but over the period of years, no immediate balancing adjustment. Adjustment on main pool or and special rate pool, except for the closure of business. In the year of closure of business, we do immediate balancing adjustment on everything. But one more thing which comes in exam. One more thing which comes in exam. And what is that thing? Sometimes you get, see, opening balance. See this SRP, just for your reference. Opening balance, add addition, less disposal. And if you get a negative number here, whenever you get a negative number in any pool, main pool or SRP, then you can't wait a single second and you have to take immediately that negative number as a balancing charge to the right hand side. You are not getting. Even the business is running, business is on, there is no last year, there is no closure of business. But whenever whenever you get a negative balance in any pool, balance means balancing charge. So now government won't wait a single second. And no need to apply, 18 or 6%, 18 on 6% on negative number. You simply take the complete negative number in the allowance column. That's it. Don't forget, these questions are available. In your kit, in your exam kit. Means past paper. Exam kit is full of past papers. Okay, don't forget. Did you understood this? Tell me. Now, some final things which I want to tell you. First of all, now we have created a WhatsApp group. I have few slides with me of differences between individual tax and corporation tax. This is a very dodgy area. There are some rules which are common for individuals and companies. Yes, there are some rules of tax which are common, which are same for individuals and companies, but there are things which are different for individuals and companies. Many things, like in individuals you have personal allowance, in corporation tax you don't have personal allowance. See, right? In individuals, each and every income has separate tax rate. In corporation there is a flat tax rate of 19%. There are no bands. In individual we have bands. In individual we have NRBs. In corporation tax there is no NRBs. So there is a list of many differences which I have written. I've tried to written most of them. So what I will do in that WhatsApp group, I'll send you the pictures of those differences and then voice note, then picture, voice note, picture, voice note, picture, voice note. So that will be very useful for you. Okay, plus I will also send 2 lectures in Hindi, Urdu language. It's on my YouTube channel as well. And one is related to the first chapter of theory. You know, if you read the book and it comes in exam, the first chapter, that economics chapter, that why tax is charged, what are the reasons for taxes, social factors, environmental factors, economic factors of taxation. Then what is tax evasion, what is tax avoidance, what are ethical issues with tax. So this chapter I have in on my YouTube channel. I'll send you the link, so those who understand the Urdu Hindi language, they can watch it. Okay, one more video I have uploaded on my YouTube channel, that is trading income, detailed trading income lecture, that the whole journey from accounting net profit to tax adjusted trading profit, from accounting net profit to tax adjusted trading profit. Okay, now one thing just for motivation I want to say you, that still you have time. Today's, if today is 13th of November 2020, still you have 20 days or 19 days, I must say. No, still you have 1 month, sorry, 1 month or 25 days. So it's too much. I still remember almost I've been teaching this paper for last 16 years, I think. Yes, 16 years almost. And I remember 6 years back, I think 2014 or 15, still that status is on my Facebook. If you scroll my Facebook profile, you will find this status. Listen, the real case. At that time, there were no, 6 years back, there were no online classes. There were no culture of online classes. And we used to offer physical physical crash classes. And I was the regular guy for crash. So I still remember a university student came to me in my crash class. Listen, the real. And he told me that, sir, he joined the crash class on 19th November. 19th November, exactly. I remember that. 19th November, I started the crash class. He said, sir, I haven't studied in my life a single word of tax. And he got some exemption from ACCA because he came from BBA background or something. So he said, I've never studied tax. So I said, okay, take my first class. And I used to take 8 hours crash class in one day. 1 week crash course, 8 hours in one day. And that was a very detailed crash course. Listen. So he attended my first day class. And after the class, he said, sir, should I give paper in December or not? So I said, did you understand today's class? He said, yes, I understood. So I told him to buy exam kit on 19th November. I said, okay, buy exam kit on 19th November. He bought exam kit on 19th of November, exact date I remember. And believe me, that guy cleared the paper on, I think, 5th or 6th December. 5th or 6th December, he appeared in the exam and he cleared it. And he finally, on the result day, he uploaded the status on Facebook. And he thanked me. And you know, I shared his status. And what he did, he reshared my status with this notion that happiness is when your teacher shares your status. This was the whole story, real story. And I still know that guy. He's still in touch with me. He's working in a company. So those who work hard, those who are serious, those who have some objective, they clear in 15 days. Believe me, 15 days, 14 days enough. And those who don't want to, those who don't want work with objective, they can't clear in years. They can't clear in 1 year, 2 years. They four attempts, 3-4 attempts. And the guy who wants to clear, 15 days is more than enough. So please, they take some motivation. Still you have time, a lot of time. Just manage your time. One more thing, I would say, make your exam folder. You remember I told you to make exam folder. Even I've recently made a video on exam folder. I'm also a vlogger, and I will send you that video as well. You guys can see that video, that how to make exam folder. So make your exam folder. In this way you can memorize things. One more thing, let me share my own experience when I was giving my tax paper. This paper is F6. At my time, the name of this paper was 2.3. You know, in last 3-4 days, what I used to do, I never do written practice in last 2-3 days, because you have less time. In less time, and you can't do written practice. So I used to solve complete kit orally. I used to, because there is a lot of learning in text, so I used to solve complete kit orally in last 2-3 days. How? I used to see the question, and I used to close my eyes, and I used to imagine the solution in my own mind, and then I check the solution, then question solution, question solution, whole kit, complete kit, everything is revised in last 3 days. So you can, if you want to do, you can do this approach as well. Okay, right? So don't lose hope, stay motivated, still you guys can clear. One more thing I want to announce, yes, that's also beneficial for some of you guys and your friends. This time I'm also offering the same session on my own platform for F7 as well, F7, so that students can, and that's free of cost, and it's in English language. So we are offering for F7, F8, SBL, P7, AAA. So you guys, if you guys want to attend, or your friends, they can attend, they can attend the revision sessions as well. Okay, so for now, let's say goodbye, and best wishes for all of you, and stay serious in that WhatsApp group. That WhatsApp group is not for fun. I'll send you some things relevant to you in that group as well. Okay, so let's end the session. I'll send you today's slide as well. Today's slide will be sent to you, updated slide I'll send you. Okay,